Hey, what's up, guys? My name's Charlie, and I want to help you build wealth in real estate. Real estate can be a phenomenal investment vehicle if you know what you're doing. The problem is it's really risky and can be extremely confusing. So I'm here to demystify real estate, and I'm here to help you build wealth. All right, guys, welcome back. On today's episode, we are going to look at why invest in real estate. We're going to look at 5 key benefits of investing in real estate. There's a ton, but I wanted to pick the top 5 in my book and many other investors' books. So let's take a look here. All right, so the 5 key benefits of investing in real estate, and we use the handy dandy acronym IDEAL. Passive income, stop trading your time for money, equity buildup, the key to growing your net worth, leverage, increase the velocity of your capital, depreciation, and appreciation. So let's look at the passive income, or depending on what type of real estate investing you do, it may just be income, right? It could be cash flow. So in real estate, what we do, we buy properties that cash flow. Okay, so what that means is all of the income from rent, fees, pet rent, different things like that come into the property. And every month you pay your expenses, you pay the mortgage, you pay insurance, maybe a property management company, maybe there's operating expenses as well. And so the end of the day, you have income minus expenses equals cash flow. You always want that to be positive. If that's negative, that means you're losing money on that property. That's obvious. So one of the main benefits of why invest in real estate is the income. Now, I actually buy apartments, and what we do, we do a syndication route, which that means we pool investors' money together. So there may be 5, 10 of us that are running the apartment complex. We find the property, we underwrite it, and we manage the asset. We manage the apartment complex, and we're on weekly calls. But that doesn't mean that we use all of the 5 or 10 people's money and buy a property. What we do is we syndicate it. So we have a list of investors that love passive income. And these people put their money into the deal alongside of us. The benefit is they don't talk to tenants. They don't deal with termites. They don't take care of termites. They don't do anything like that. It is purely passive for them. And some types of property offers passive income. A single family property, you typically don't get that unless you have a partner that's doing all the work. Maybe you front the capital. But one of the key benefits of investing in real estate is income and potentially passive income. So when we look at depreciation, the D in IDEAL, depreciation can decrease your taxable income. And so what that means is the government has allowed depreciation on real estate, on real property like real estate. So what they'll say, and it depends if it's a single family, like a residential property, or if it's a commercial property like an office building, a medical building, industrial, apartments, whatever it is. The government looks at a residential property and they depreciate the property over about 27 years. And they'll take that, divide the property value divided by 27. And each year you get a small write-off on your taxes. Now what that does is that reduces your tax burden. So I'm not a CPA. I have a really good one. But what that means is maybe you made $100,000 this year. But in real estate, you had $50,000 in depreciation. Now your taxes are not based off that $100,000, but potentially that $50,000. You're still going to pay taxes, but it's on a much less amount than that $100,000. There's a lot of wealthy people that love buying real estate, even if it doesn't really cash flow, just to take advantage of that depreciation. Let's look at E, the equity buildup. So equity buildup is phenomenal in real estate. it's the key to growing your net worth. And so what equity is how much your home is worth versus how much you owe on that property. And you can increase your equity by two different ways. One of those is by paying down your mortgage, paying down the balance or the principal, what you owe the bank. And the other one, which I'm slightly getting ahead of myself, but is appreciation. And we'll talk about that next. With equity buildup, every single month that you pay your mortgage, your principal goes down a little bit. And you're paying principal, you're also paying interest. As the principal goes down, the property, now you have more equity. So you're building equity in your home. When we go to the next one, appreciation, this also helps with equity buildup, but real estate appreciates over time. Every market is different. Some markets may only go up 1 or 2%. Some markets may go up 5 to 7%. Totally depends. And every year is different too. Sometimes it will actually drop. Sometimes the value will skyrocket. The appreciation will skyrocket. Totally depends on where we are in the real estate cycle, where you are physically, what market you invest in, and a lot of other things. But over time, if you look at the period over time, real estate appreciates. And so your property today maybe is worth $100,000, but when you go to sell it in 4 years, maybe it's worth $120,000. So that whole time, those 4 years, while you're paying your mortgage down and your equity is going up, the property is now worth $120,000. So maybe you put $5,000 down on the house, you put 5% down, you put 5,000 down on the property. Now the property is worth $120,000 and you have paid down your mortgage. You may walk away with $35,000 or so, not including realtor costs, fees, things like that. But that's a $30,000 equity buildup and check that the title company is going to send you, or you'll put that into a new property. And then finally, leverage. Leverage is my favorite benefit of real estate because it works like this. When you buy, in that previous example, you buy a home for $100,000, you don't put $100,000 on the property. You're only putting potentially $5,000 down. And so what that means is that money, that $5,000 that you put down, the property's worth $100,000 and you put only 5% down. The bank, you are leveraging other people's money. You are leveraging the bank's money, $95,000. So when the property goes up in value, you've already given them their money through the mortgage, through principal and interest. And so what leverage does is it lets you use only $5,000. You're not buying the house with $100,000. So with that $5,000, as the property appreciates over time, now that $5,000 that you spent, you're getting $30,000 back. So you just 6x'd your money in 4 years using that previous example. Leverage is phenomenal. You don't get leverage with almost any other asset class. And one of the reasons that the bank and financial institutions are totally fine with offering a mortgage to a property, think about it this way. Banks are very, very conservative, very risk averse. Why are they okay leveraging, giving 95% of the money on a property, and me as the buyer, I'm only putting 5% in? It's because I have insurance on the property. And so if something happens to the property, then we'll be able to rebuild the house. The land that the property is on is worth something. So even if if I don't have insurance, if the property gets completely destroyed, I still have land. It's still worth a little something, right? It's probably not worth the $100,000 I paid, but it's still worth something to someone. I can still sell part of it. That is, those are a couple of reasons why banks are okay with leverage. The other thing is real estate is such a phenomenal investment vehicle that a property is not just going to go bankrupt. They're not just going to file for bankruptcy the next day, like a stock or a company could. So there's a ton of benefits investing in real estate and investing with using income, depreciation, equity buildup, appreciation, and leverage. I hope you like this video. We got a lot more coming. Please feel free to reach out to me if you have any questions. I'm happy to talk. I want to help you build wealth in real estate just like I have. If you have any questions on what I do in the multifamily syndication space with apartments, please reach out to me. Thank you.